Also done the regulatory environment, who is an auditor, how is he appointed, how is he paid, the things you should know upon his resignation and all those things. Now, today's lecture, we are looking at ethics, so ethical consideration. Now, usually in the exams, you will see a question like they will give you a case. And in the case, they will ask you to discuss the ethical issues or the ethical and professional issues in the case. So today we are looking at the ethical issues that you may, if you are asked ethical and professional, what accounts for ethical issues? So that is what we want to talk about. Now, when you are asked to deal with the ethical issues, there are 4 frameworks you are going to use if applicable in the exam. So that is that. Now, the first one is the use of the SYLLABUS, and we will explain it very soon. Some people add M to it to call it SYLLABUS. Yeah, so we will adopt the concept of SYLLABUS in terms of analyzing the ethical issues. 2 is confidentiality. So if you see in the case, the applicability of confidentiality, then you also adopt it and use it to answer your question. 3 is conflict of interest. Conflict of interest. And you will see in situations where we should adopt conflict of interest framework to answer the question. I call it C of I. So C of I. Then the last one is I of C. I of C. I of C is about the integrity of the client. So this is the 4 major angles that you are going to use to answer the question. All right, so whatever case that you are giving, the moment you see this one, ethical, watch out for these ones which are most applicable. All right, so that is that. Now, let's break them down into pieces. First of all, we want to deal with the SYLLABUS concept. The SYLLABUS concept. Now, in dealing with the SYLLABUS concept, we call this SYLLABUS concept threats to objectivity. Threats to objectivity. Where does this objectivity come from? It can also call threats to independence. Now, these things come from the IFA Code of Ethics, which you know, the IFA Code of Ethics. There are 5 of them, which every chartered accountant should know. One is, if you don't remember this, you can use the acronym COPY for it. All right, COPY for it. The I is integrity, and you should know what integrity means. These are English terminologies, so you should know what it means. 2 is objectivity. It's an English word, so there's nothing like I don't know it. It simply means you are straightforward, you are objective. Integrity means you are honest. So as for these things, at your level, you shouldn't say, I didn't read it, so I can't answer it. These are English words. Then we have professional competence and due care. You know the word competence, and you hear the politicians use it. So at least, and due care is an English word. You care, giving somebody the caring the person deserves. That is, or the caring that is due to the person. So we ask you to be diligent. Professional competence means that you should be experienced, knowledgeable enough. Then 4 is confidentiality, and it is something we will discuss today. And the last one is professional behavior. Do not behave in any way that brings disrepute to the profession of accounting. So these are the IFA code of ethics, but in order to, nobody is going to ask you to explain any of these. It's unnecessary. But what you'll be required to do rather is to identify threats to objectivity, something that can make the auditor kind of bias. All right. That is the threat. The objectivity means he has to be straightforward. He has to be independent. He needs not to be under anybody's control. All right. So if there will be a threat, then it means that that threat is going to make him biased. That threat is not going to make him independent. It will make him look like he's under control of somebody. Now, recently, I heard that the president of Ghana, His Excellency John Dramani Mahama, has appointed a new auditor. Now, does that mean that the auditor is under the control of the president? No way. The president will also be subject to audit, the government machinery. But him appointing the auditor is just a constitutional provision. So it doesn't mean that the auditor should be biased towards the president. If that thing happens, then it means we are already facing threats to objectivity. So in the exams, you are going to fish out some of the things that poses the threat. All right. Now, there are these 5 categories of threats you may see in the question. The first one you see there is called self-interest threats. Self-interest threats. Now, what is self-interest threats? We are looking at a situation whereby the auditor, all right, has an interest in the client. The auditor has an interest in the client. What kind of interest are we talking about? We are talking here about financial interest. That will be one of them. So, 1, financial interest. So it can be financial interest or any other interest. But how does the interest pan out, or how do those interests pan out? That is what we are going to discuss. The first one is financial interest. Okay. Then to every threat, there must be a safeguard. So what I'm going to do is that, once I give the threat, I'm going to suggest the safeguards here. What we can do to check the threat. Now, when you pick financial interest, we are talking about a situation whereby the auditor or the audit firm, you remember we learned last week that audit firms, according to section 41 of Act 1058, should be either partnership or sole proprietor, just so that the liabilities of the auditor will be even be his personal asset. It will be his personal liability, and so therefore his personal asset will be affected. All right. So we are looking at a situation whereby the auditor has financial interest, and that financial interest can be in the form of owning shares. It can be any way. All you have to do know is that they have an interest. All right. It can be owning shares. It can be any other form of investment. It can be any beneficiary interest. So far as beneficiary, so far as it is a interest, it is interest. All right. So that is that. Now, he owns stock or whatever, he has financial interest. Now, when that happens, you see, it will tend the auditor to be a little biased towards him. So, in situations like this, there are safeguards that you have to do. Now, according to the IFAC Code of Ethics, the audit firm, all right, it outlines three categories of people who should not have interest in the client's business. So, this is what it lists. One of them, he says that the assurance firm, that is one. A member of the assurance team, those who are going to do the audit. Assurance team. Three, any immediate family member of a member of the assurance team. Should not have direct financial interest. Now look at this. These set of people, they are not supposed to have direct financial interest, nor indirect material financial interest. Indirect material financial interest. So there is discretion here. Indirect financial material interest. So they should not have direct financial material interest or indirect financial material interest. Now, the IFAC says that if they have direct financial interest, then no safeguard is sufficient. You just have to drop the job. If you have direct financial material interest, direct financial interest, no safeguard. So your only safeguard is to drop the job. That means that don't do the job because you will definitely be biased. All right, that is that. Now, but when it comes to the indirect material financial interest, we have to assess it very well. We have to assess it very well. Because that one is some way. So, for example, if I just completed University of Ghana and Deloitte employed me my first year, I'm serving probation and stuff. Then my father is owning shares in the company Deloitte is auditing. Would that amount to financial interest. So my father, let's say my father is owning 50% of A company limited. Deloitte is auditing A company limited. And I am somebody who is newly employed as a fresh auditor, a fresh person auditing, being part of the assurance team. So would that cause self-interest threat? Because I am not the one who has the direct financial interest. I have an indirect because it is my father, and 50% is material. But what do you see? Would that cause a threat? What do you see?
It will cause a threat because of the family member relation.
That what you have just said is not enough as an answer. And you have to make it enough. He's not a junior auditor. I just said the person is just employed, not he's just a fresh graduate, and
Okay.
he has just been employed. Like he came in fresh, learning his trade through the ranks. So you have to situate the thing in the question that I have given. So would that create financial interest threats?
Yeah, I think not. It will not create financial interest because definitely somebody who has just been employed may not be the one leading the audit. So his opinion is not really that matters. I don't know.
Is the I don't know part of your answer?
No, it's not part of my answer, but I mean, my answer is no.
Okay.
It will not affect it.
Okay. Yes, any other? All right. So in this instance, we look at influence. All right. We look at influence. So the key word that will help you do the analysis is influence. What influence will the newly employed person have? All right. What influence will he have? Because every work that he's doing, somebody will supervise it. And another person, you see, he's just part of a team. So there will be a lead, and everything the person will do will be subject to the lead. So sometimes you have to see the influence. It matters. All right. All right. So where you see that the influence is significant, then you have to apply certain safeguards in. All right. So influence matters. So if there is some form of influence, all right, then what you can do as a safeguard to this kind of situation is to ask the person to dispose of the interest. You dispose the interest. But you see, we are talking about a situation whereby he is not the one owning the interest. He's not the one. So that is that. So here we are looking at, here we look at influence. So if the influence of the person is not there like that, then that is that. But if the influence is huge, then there has to be a disposal of the interest. That is what we are talking about. Even with
So,
this one, yes.
yeah, please, what of maybe the company in the inside is going through troubles, and then this
Which
individual,
company? Which company?
the one they are auditing,
Okay.
please.
Uh-huh.
the one they are auditing is going through some troubles, and then this guy who has just been employed and is part of the team leaks that information to his father.
So
I
that
mean,
is still about influence. If you work in a business, you are a fresh person. How closer do you get to these things? It's still about the
okay.
influence. All right.
Okay.
Yeah, because you are there. I'm sure some of you work in businesses. You are somewhere at the finance department, sitting at the lowest corner. Whatever is happening, you have no idea about it. So it's still about the influence. Yes, Reginald, your hand is up.
Yes, talking about disposing of the interest, this is a junior staff, and I don't think,
No,
like you
so
rightly
that is
said,
what I said. If you listen to me carefully, I said if the influence is significant, of
yes, sir,
course, somebody
yeah, if
who,
it's even if it's significant, I don't think the person, how can the person tell the father to dispose of the interest?
of course, you can do that, but as to whether the father will dispose or will not dispose is another matter. Yes,
That's
so
what
that doesn't end the only safeguard. So if it can be done, then you have to remove the person. Did you understand?
I now understand.
Remove the individual. Yes, Abiyahu.
Okay, so I think the question has been answered because I was about to ask uh, the person that the audit officer is not the person who have the direct interest in the company. So I wonder how the person can tell the father to dispose his 50% interest. But I think it has
Exactly.
been answered.
Yeah, so in reality, it is not going to happen. So what will happen as the audit firm is for you to remove that such a person from the team. All right. Not only that, anytime you remove a person from a team, you must review whatever work the person did. All right. So you independently, you let an independent person carry out a review on whatever work that person did. Yeah, so that is what you do. I can see this class can be a very interesting one because you can contribute. It means you are reasoning to review the work already carried out. It's very important. All right. So that is that. So look at the situations of the self-interest, and that is what you are supposed to do as part of your safeguard. All right. That is that. All right. Feel free to interact and engage. All right. It's very important. It helps you to remember a lot out of it. Number 2 is business relations. Business relations. Now, we are looking at a situation whereby the audit partner or the audit firm has some form of business relations with the client. Now, let me make it more specific. So let's say now Deloitte is auditing Kingdom Bookshop. Kingdom Bookshop. Now, we are looking at business relations in so many phases of it. Sometimes the business relation might be that the audit firm and the client has a joint venture. They've come together and they are doing a business. All right. But there are situations whereby their business relationship is a distribution one. It's a form of a distribution arrangement. So, for example, Deloitte is supplied by Kingdom Bookshop. Product and services that they use is supplied by Kingdom Bookshop. Deloitte is the one auditing Kingdom Bookshop. What are some of the problems that can be seen there? Number 2 is Deloitte and Kingdom Bookshop operates a business called AMA Limited. And Deloitte is the one auditing that AMA Limited, and is also the one probably auditing the Kingdom Bookshop. So in that situation, there may be issues of independence, definitely. Now, in the situation whereby they are doing business together, like the joint venture, they have a partnership in doing any form of a business, please, you should, the safeguard says that you should not participate. No participation. So if you are part of the joint venture, then it means you can't be the audit, because an officer of an entity cannot be the auditor of that entity. We learned that in regulatory, the things that disqualifies the auditor. All right. So that is that. But if it is about this distribution one, whereby in this case, Deloitte is auditing Kingdom Bookshop, what do you think can be done? Should they say no, because they are the ones that are auditing them? They can't, that supplies them books, pens, and things. They should not audit them. What do you think? What do you think? Yes, Amiel.
So, sir, I think it depends on the nature of the agreement, or if the transaction is an arm's length transaction.
Okay, so
Then
you introduce a technical word, arm's length.
Yes, then I think the Deloitte can go ahead and audit them.
Yeah, so that is basically what it is. So if the transaction is an arm's length, then it does not constitute a threat to independence. But if it is not arm's length, then it means that no, you cannot. But you see, the tricky grounds is that, will we know that it is an arm's length in practice, or it is not an arm's length? Yes, we can actually know. So we check how much Kingdom will sell whatever they sell to Deloitte to another different person. So in the exam, there was one of the case, they said they want to give them a special package. Special package. That was the terminology they use. When it happens like that, then it means that the thing is not an arm's length. And so since it is not an arm's length, then it falls into a situation whereby it will affect the independence. And so therefore, the safeguard therefore is that you do not be their auditor. So you withdraw. All right. So in such cases, you withdraw. You withdraw. All right. So that is that. So anytime you see examples hovering around business relations, please take note of this. All right. So that is that. Okay. Now, sometimes too, they won't say, okay, if you will not be the one to do it, can you recommend somebody for us? Can you recommend somebody for us? Sometimes they do that. So if you recommend somebody for them, then it means that whatever that person did is just you doing it because you are the one who recommended. That's why recommendation is a very serious business. In our part of the world, we take some of these things as a joke. Like somebody will come and say, and I see these things in our office in University of Ghana, it happens a lot. A student will come and say, I've gotten school abroad and they need recommendation. Can you give me recommendation? Imagine. So I don't know you anyway, and you want me to give a word that you are a good person. I mean, and we think, and you know, it's funny. When the lecturer says no, the student thinks that the lecturer, you can't say, how does that thought even come to your mind to see that? when the person doesn't know you, but you want the person to give the recommendation. It's something that one day we cried. A student entered, he said, please, it is urgent. So my boss said that, is it urgent for you or is urgent for me? If it's not urgent for me, then please leave my office. Let me have my peace. Yeah. So if an auditor recommends, it's as good as, because if anything happens, the auditor will have to keep quiet because it will come back to him or her. So that too is the same thing. We will look at a typical example of such in a self-review threat very soon. All right, so that is for business relations. Now, the next one we want to consider is potential employment with the client. Potential employment. This one I've seen some before. Potential employment. Now, what happens most times in this scenario is that the audit officer, you are working in somebody's office, like you are auditing the person. Then the person says that they will come to you and say, how much salary does your audit firm pay you? Or you say, oh, okay, 3,000 Ghana cedis. Oh, no, no, no. At your level and this kind of work we see you do, I think we can even pay you 7,000. Yeah, so think about it. Now, immediately this kind of situation happens, the head of that officer becomes kono. And so therefore, if there is anything he needs to call the client on, he is threatened of that objectivity. Because if you do that, it means the client may not hire you. So automatically, everything you will be doing will not be objective. So the principle is this: if such a situation happens, you, the officer, you are supposed to notify your boss, notify the partner. And once you notify the partner, they are to remove you from the engagement team. Now, when we remove you from the team, we are checking to see if those people really want to hire you. Do they want to hire you because you're on the team, or they just want to hire you for real, for real? So once you are being removed from the team, another person will replace you. All right? An independent person will review every work that you have done. So independent review. Just like what happened here. So that one too, an independent person will review. So in situation like that, that is what is supposed to be done. So if you read the question, you find situation like that, this is what you are supposed to come up with. All right. Then we have another situation of recruitment services. Recruitment services. Now, when do you encounter recruitment services? Recruitment services, and that is where people call it the SAFI. They use management impact for these recruitment services. We are looking at situations whereby audit firms recruit for entities. They do their recruitment for them. Now, they are the same person auditing the firms they do the recruitment for. So, how do you see a threat inside that? Yes, anyone? How do you see a threat inside audit firm recruiting for people and also being the same person who is auditing them? How do you see a threat out of that? You've already shown me that this class is interactive, so don't disappoint. Yes, anyone?
Hello, sir.
Yeah, go ahead.
If the audit firm is a recruitment agency for the company that is to be audited, it's likely to impair the judgment of the audit team because you are likely to maintain the business of that company. So you are likely to be very soft and tender with the way they conduct their business. In short, it will impair your objectivity and judgment over the affairs of this company.
All right, that's fine. Mr. Yeah, Amiel. Amiel, go ahead.
I mean, if the auditors are supposed to employ for or do recruitment for the company they are auditing, and they happens to recruit maybe a key management member for the company, it is difficult for them to review the work that the management member has done. It will, just like the other brothers said, to impair their judgment when it comes to reviewing the work of those people they have employed or recruited for the firm.
Yeah. So, like he said earlier, you would want to keep that business. That business you are doing for them is a financial one. So you want to keep that thing. Number two is what Amir has also said. Now, it means that we must check because whether that person they are recruiting for is a key management person. The OSP call them persons of interest. Now, you see, these people that you recruit for them, they are going to make some decisions. These are the people probably preparing the financial statements and all those things. Now, if you are auditing them, you are tempted to have a softened hand because you are the same person who brought that person. If something goes wrong, like I said earlier, it is you who did the recommendation. You are the one. You are the one. So you see, the principle in safeguard is that, especially for a listed company, no audit firm is supposed to provide these kind of services to a listed company. You are not supposed to search for candidates for them. You are not supposed to even check for references for them. So please check the entity. Is it a listed entity? If it is a listed entity, please, it is a no-go area for you to do these kind of employment services for them at all. At all, at all. It is a no-go area because you must not make employment for anybody to the client who is in a management position, a person who will make a management decisions. It's a no-go area. All right, so it is a no-no. But you see, most of the time, the ones that the audit firms are doing is usually an unlisted company. If it is an unlisted company, so for this one, whether it is a person of interest or not a person of interest, it is a no-no. When it is a listed company, you must not do it at all. All right. In relation to senior manager or a director, you must not provide that services at all. But any other person beneath the rank who does not make management decision, then that one, you can have your way around it. So that is why you see them employing officer, those kind of things. All right, that is that. So the key term here is that, is the person going to be in a position of management? That is the key term. That is the key thing. That is the key. All right, I hope you got that one right. All right, so that is fine. So check for that. check for the management. Is a director, a senior manager. You must not go through and do any of these things at all. But when it is an unlisted company, the decision rests on the person who is doing the real employment. For listed company, unlisted company, you know that the effect of their financial statement is not to the public most of the time. And so therefore it is within themselves. So you can let a part of your audit firm, which you will call non-assurance services, do the recommendations or the start approve so what do I start the recommendations or the recruitment services for the client, but at the end of the day the client is the one going to make his own decision. All right, that is when it is a private or unlisted company. All right, so take note of that. All right, then let's look at another one. Money matters. 5, fees. Now the fees, I'm going to group them into one: the audit fee that you take. The audit fee that you take. As a matter of fact, when it comes to the audit fee that you take, you can take your money. Nobody has no problem with that. But it is of a concern when the business you are auditing is a public interest company or a listed company. So for a listed company, the framework or the principle says that the audit firm should not be in the situation whereby the money that they take from the clients represents more than 15% of their revenue for 2 consecutive years. More than 15% of revenue for 2 consecutive years. What do we mean by that? Now, we are saying that, for example, if we take Deloitte, and Deloitte is auditing company A, the money that they take from company A should not be more than Deloitte's annual revenue, 15% of Deloitte's annual revenue. Now, why is that a problem? Because if one person is giving you more than 15% of your revenue, in account system, we say "Sa nipa no yensi ni fam." It means that whatever that person wants, you try and find a way to do for that person. Because that person's money can even help you pay all your operational expenses. So you have to do whatever it takes for that person. That is what the issue is about. Now, when such situation happens, what you are going to do as part of safeguarding is just to disclose. Now, as for the disclosure, even in our law at 992, you are supposed to disclose every money you give to an auditor. That is the client's part. But in this case, the audit firm is also supposed to disclose it, how much he is taking from the client. All right? You are also supposed to disclose it. And once that thing happens, independent review will be done by the regulatory body on any work that you do. So ICA is supposed to do independent review of that. And this is what you must know about the listed entities. All right. So that is that. That is that. Any question on that? Any question on that? Now, usually when the thing is above 15% of your annual total revenue, insurance is required. A pre-insurance is required. And that makes me remember what that professor came to Ghana to tell us. You see, it means that the independence of the auditor in this case is very, very paramount because he's taking more than 15%. He may side with them or, I mean, have a shaky objectivity. And so, therefore, we are saying that the outcome of the audit, which if the auditor is to say true and fair, when it is not, other people will be affected. So insurance is required so that when those people are affected, the insurance money can indemnify them. So that is that. So the professor said that we really don't need regulatory bodies to be doing this. Let every audit firm insure every job that they are doing. Now, if you know, you will see that the insurance people will assess this kind of objectivity. Because this objectivity thing that we are talking about, who assesses the objectivity? That's the problem. But if you are going to insure, the insurance people, because they will take premium, they will take time to assess the objectivity and all those issues. And it will affect how much they are supposed to take as premium. And so therefore, if you are a stakeholder and you know that this audit firm is paying too much premium on that, then it means that you must be careful because there is a danger somewhere. So that is that. That is what that professor came to Ghana to propose. Me, since he did that, and this is about 2-3 years ago, I've been thinking about it and trying to see how that thing can shape in Ghana. But I'm sure I was in the meeting with faculty members. I'm sure they didn't even give a thought to that thing. Yeah, but it's something I always think about whenever I'm teaching audit. Yeah. Because in 2018, Deloitte was fined 1 million. Where did that 1 million go? Was it to the people of the capital bank who suffered? We don't know. All right. Yes, Mr. Ansog, your hand is up.
Yes, sir. I just want to ask that if the auditing company and the client would want to avoid this public disclosure, can they arrange such that what they disclose will only be, let's say, 10% below the 15%, and the other 5% or more will be hidden under secrecy?
Oh,
So
the
that, I
truth
mean,
is that if they don't even get to the 15%, they wouldn't have to even do the disclosure at all. So I get what you mean. So that they even don't disclose, right?
yes, yes.
Yeah, that is a pure irregularity. But you see, all these things, it's not like it is not done, like you are saying. In a way, that is why an audit firm has to be audited so that they too can fish out all these things. So it all goes back to, you see, the need for ethics in our system. Somebody has to hate wrongdoing and say, no, this one, no matter what, I won't cover it. It's a big issue. It's a big issue. In our economical system, like the last time, I don't know if it was this class that I was discussing with, the research is suggesting that after 1990 born people, ethics has fallen. It's about money. Let's make money. So whatever it takes. Somebody must hate this kind of things. Other than that, when trust, oh, of course, we are in Africa. So there is no, me, I've always said that, there is no research done in Africa where trust is not a variable. Unfortunately, that is it. Unfortunately. And so even we ourselves, we see this thing as a problem. Then when we travel, we expect the foreign country to give us, same treatment as they give to their people when we do this thing to ourselves back in our own home. It doesn't make any sense. I shared a painful experience last year when I came to Malaysia. and it was in the evening. We booked a Grab, and a young lady was driving the Grab. When she got to where it was me and my friend, when she got to us, she drove over. And I told my colleague that we should not blame the lady because of what we do to ourselves. She is seeing two black people. And you think that doesn't have impact? The day I was doing the orientation with you, you remember one Nigerian asked me a question. The day we were doing the orientation. And anytime I go downstairs of my apartment to go and buy something, like the first day I went, they asked me, am I a Nigerian? Then I said, no, I'm a Ghanaian. They said, oh, okay. Why are they asking me that? Apparently, some Nigerians have come to destroy the system. Yesterday, last week, I was in a commuter. I met a Kenyan. We were talking. The same thing he told me, that they have destroyed the system. So what you are saying is true. It's possible that some way, somehow, conniving happens somewhere. And so therefore, somebody must hate wrongdoing. Definitely. And the person will fish it out, and we take it from there. So that is that. So that is why when it gets to this one, an insurance has to be done so that when the thing fails off, then that is that. You have heard in situations whereby people take contract, what they declare on the contract is different from what is done side gig. I have been in the petroleum industry before, and I know what happens there. Oh, these things happens a lot. It happens a lot. And customs, you've heard of it. And sometimes the thing has become the norm that if you are not doing it, you are colo. It means you brain don't work in your mind. Yeah, that is it. Unfortunately, that's it. All right, that's by the way. Thank you. So that is that. Another thing about fees we should learn is something called low balling. Low balling. Now, low balling is a situation whereby people charge a lower price. They quote a significantly lower price. Why do they do that? Just so that they will be able to get a job. That is it. So, for example, I know that this ICA thing that we are doing, we are all learning. You will be paying 550 or something. Then somebody comes in and say, oh, pay 300 Ghana cedis for every course. Because people are price sensitive, they will shift. Now, it's fine. In a business, especially, I growing up, I did some construction work. Now, in the construction work, I know that when you are mixing mortar, or not even mortar, well, mortar is one of them, but when you are also making blocks, what I remember is that we used to make 4 wheelbarrows sand, and we will put 1 bag of cement inside it. Then we will start doing the blocks. Same for mortar making. But you see, and you factor these things into the costing, and you give it to the person you are doing the work for. But other masons will charge lower because they will do 6 wheelbarrows than 1 bag of cement. That is what people do. So the thing is just to charge a significantly lower price to get the job. Now, you do know, and sometimes the idea is that when they get the job, subsequently they will try to increase the prices. You see, you must be truthful to yourself to know that the money that I'm taking, is it sufficient enough to do the work? So in audit, you must price. The pricing is usually on the staff you are using and the time you spent on the job. So in lowballing is not abolished, because sometimes the truth is that, like I'm saying, somebody can take the 300 CDs for the ICA class, but will still teach you well for you to go and pass. So lowballing, there is no problem. But the problem is that when the lowballing will affect your quality control procedure, when it will affect quality. And so therefore, we say that please comply to quality assurance. That is the safeguard. Compliance to quality assurance. 2, pricing must be based on the staff you are using and the time. The time. Because in audit, that is what it's about. All right. I know in our part of the world, this thing called time is a big problem. It's a big problem. Yeah. It's a very, very big problem. But maybe very soon we will come around it. Because I've seen audit works where the work delays for so much long. So much long. Sometimes it is the client who is causing that. So the auditor doesn't mind because it will go into the pricing. Sometimes too, the auditor who knows the thing will go into the pricing will also be slagging small just to have the money. It's all these things are not good things. All right. That is that about the lowballing. Another thing about fee you must know is what we call contingency fee. Contingency fee. Now, what is contingency fee? Contingency fee is, the word contingency means conditional. So it means that the fee is based on something. The fee is based on something. Please, this one is not something that is allowed in audit. It's not allowed in audit. Especially when it comes to taxation. Non-assurance work like taxation. You tell the client that if the GRA man doesn't catch you, this is how much I will take. But if he catches you, this is what you give me. So you have to give me the base amount. If the GRA man does not catch you, I'll come for my balance. All these things are unethical, all right? And so therefore, they are not allowed. So no audit firm is supposed to enter into any arrangement of contingency, all right? So please, that is that. It's not allowed. All right, that is that. Then the last thing about fees is what we call overdue fees. Overdue fees. Oh, sir, I know I owe you, but let me join the class this date. I will add it to everything I'm owing you and I will pay you. Please, that thing is also something that is detestable. Overdue fees. So if you owe, pay so that the next job, once it is done, you pay. So it says that there is a leeway. So it says that the audit firm, all right, should only allow work on overdue fees when the client has shown proof of arrangement of payment. So you have to show proof of arrangement. So do not perform any further work until the outstanding fees are paid or there is proper arrangement made for payment. Arrangement made for payment. Because when somebody is owing you and say, come and do, it's like you have to do the thing just to collect the money that is being owed you before. And you can do the work in a subjective manner, because the truth is that the reason why you are doing it in the first place is because you want your money. That's it. All right. Then let me add some 3B, then we go. Let's talk about gifts and hospitality. This one happens a lot. Have you seen situations whereby auditors go to audit and they are giving lunch? You've seen that thing before. It has become even a
Yes.
practice. You've not seen it before.
In fact, they are
Oh,
even
it's
demanding
normal.
for it.
Normal.
These days they are demanding it, Abi.
Yes.
Hey, if you don't give us the
So does that thing affect objectivity if you don't give them? You know, when I was a finance officer for a company, multinational company, when the auditors come, I also came to inherit the system whereby when the auditors come, they give them lunch. And the company that I was working for were not giving we the workers lunch. But when the auditors come, they give them lunch. I did not understand that. So what I did was that when we are writing the memo for the lunch for the audit staff, I'm the one who writes the memo. I always add myself as part of the audit staff, so that as long as the audit people are there, I will never buy lunch. When we are ordering, I am part. Because I didn't understand why we should be doing it for the auditors. But we that have been working, it was never done for us. So I always do that in the memo. Inside, I will always be taking my lunch. So for me, I even pray that the auditors spend a lot of time on the job so that I won't be buying lunch. Yeah. So it happens a lot. In fact, some they said that when you go to the north and a judge takes a goat, it doesn't affect his objectivity because that goat is taking is just a normal greetings, it's culture. You remember the guy who was uh, they were doing the vetting for justices. That's what he said. It doesn't impair my objectivity. Because in that, if you don't take it, rather, it's an insult. That's how we go about it. So in Ghana, to enter somebody's house and the person to offer you something for you to say no, it's like it's a problem. In some of the cultures, it's a problem. It happens in audit, but here we are looking at the consequence of it. So we are saying that unless those gifts are trivial, which means that the value is low, and inconsequential, which is very difficult for you to know whether it's inconsequential, because I hold the personal belief that there is nothing free on this earth. I hold a personal belief. Even parents, when they give their children money, good education, whatever they are doing for their children, it is not free. They expect, there is always an expectation of payment, that the children are supposed to live a certain way because the parent is giving them money. So it is not free. Even our relationship with God, I was explaining to the FM students yesterday that you are moving from slavery of darkness to slavery to righteousness. So it is not free. That is it. So there is nothing free. So how can we say the thing is inconsequential? It's in theory, this is what we are saying. But for me, I don't see, because the food that we are giving to them, like you are saying that they are demanding it even in these days, there is a consequence. It's just that probably the consequence is low or it's high. That is it. But who measures that? So it says that unless the thing is trivial or inconsequential, you should not accept it. So especially my ladies, I don't know why ladies think that people give them things for free. I just don't understand. And they will tell you that, oh, he just care, he just gave you for free. Now, I had a friend who was taking gifts from an older man, and she wasn't comfortable with it. So she told me about it. And I said, my good friend, we all know where this thing is going. I mean, people don't just give things out like that. So it's either you say no. But you see, I don't know, the ladies, is it difficult to say no to such things? Sometimes it's not like these girls they don't have anything. Oh, their parents are good. Their parents take care of them. So I just don't understand it. And when it happened that the man now asked for the thing, then the lady is telling me that the man is a bad person. I'm like, what are you talking about? Are you telling me deep down you didn't know this day will come? Because there's nothing free like that. Bishop Charles Ajinasari says that if you don't need the person, just say no. Don't be collecting the thing to the time where the person has made an investment. When he wants a return, you are saying that there is no return. Then when the person uses violence to take the return, it becomes a problem. So please, let's save ourselves. Let's save ourselves. All right. So unless the thing is trivial or inconsequential, and even if you reject it, you must document it that the person offered and you rejected so that it will be on the audit file. All right. So that is that. Audit file. All right. That is it. Then 7, let's talk about loans and guarantees. So loans and guarantee. This time round, we are looking at an audit firm. So first issue is that if the client is not a bank or a financial institution, please never take any form of loan from them. All right. So for non-financial institutions, no, because that thing is dangerous. No. But what if the thing is the company is a financial institution? The company is already in the business of giving out loans already. So what then happens? Then we go back to what you said earlier. We are looking at arm's length. We are looking at arm's length. So the arm's length becomes the bar for which you assess it. So if the thing is not an arm's length, then no. All right. So take note of that. All right. We also said that you cannot serve as a director or in any position. You, the audit firm. So now it is you, the audit firm. Can an audit manager or audit director serve on the board? Serving on the board. Now, I read one of the cases. He says that, oh, because the auditor is experienced in that nature, they want the auditor to come and serve on the board. I mean, he's an independent board of director, so board member. So is that one allowed or not? We have already said that in any situations whereby you are going to serve and you are going to give management, make management decisions, please, it is a no-go area. It is no. All right, that is that. Unless your job on the board is a secretarial one, because for secretaries, what you do is to take minutes. That is what you do. All right, but you don't make an impact in it. So if it is not administrative purposes, please, no way. So you see, self-interest alone. Self-interest alone. Have you seen the kind of things that are there for us to be discussed? It's many. So you are likely to fish out a situation whereby there is a self-interest. All right, that is that. Let's go to the second threat quickly. The second threat, we are going to talk about self-review. Self-review. Now, what is self-review? We are looking at a situation whereby the auditor did the job, whether directly or indirectly, and the auditor is the same person that is auditing that same job. So performing a service from the client and at the same time auditing that service is what we are talking about. That is a self-review trait. All right, so that is that. Now, how does these things happen? Let's look at the first situation. One involves preparing accounts, preparation of accounts. This thing happens a lot, especially when it comes to the lower tier audit firms. They are the same person preparing the financial statement and they are the same person auditing it. Now, what is wrong with that? There is everything wrong with that. So here, let me group the thing here. The safeguard, public entities or listed entities and unlisted entities. Please, for listed entities, it is a no-go area. You cannot prepare account for the person. No. You are not even allowed to approve a journal or propose a journal. You are not allowed to authorize anything. You are not supposed to do anything in that regard for the client. It is a no-go area. All right. But for a listed entity, unlisted entity, what normally happens is that you will have a department or a portion of your audit firm that will be doing that, will be helping the client in preparing the account. And you have another set doing the main audit. All right, so that is that. So please, when you are reading the case, look out. It's very important. In my book, I have a trial question that I have used to discuss with the student. Now, when you are reading the thing, you see so and so is a listed. Underline that listed because it plays an impact in your answers. Yeah. So please check out for those things. All right. Not only the financial statement preparation, you may be doing valuation services for them. Valuation services, non-assurance work, valuation services. Maybe you did revaluation on their PPE and the figure is in the financial statement. You did inventory valuation for them. It is inside the financial statement. Will you say there is something wrong with that thing? No. So for public entities, it's a no-go area. But for unlisted entities, you just have to let a separate aspect of your office go and do it. And another office will go and do it so that they don't meet themselves. All right. So basically, that is that. That is that. Even with these things, normally it is good for you to have an independent person to have a review of what work has been done. All right. That is that. Then 3, we are talking about taxation services. When it comes to tax services, we have branches of it. The first one I want to talk about is tax return filing, return preparation and filing. Now, when it comes to return filing, we know that if you have checked how a return is done, the person who does the return, there is a portion where he has to confirm that he is a consultant or he is an accountant for the entity. His portfolio, the position is there and you sign. But you see, when it comes to return filing, so long as the management of the business will take responsibility, then fine. Even in a listed company, it can be done. All right, because the person who will sign to take the responsibility is not the auditor. All right, that is that. Then 2, we have the tax calculation itself. Obviously, the tax calculation will put a figure in the financial statement. And so when it comes to the public or listed entity, it is a no-go area. But for a private entity, separate teams can be used. Separate teams can be used. All right. Then again, we have issues whereby you are doing tax planning and advisory services. You've heard that so many audit firms have advisory, they call it tax advisory. Now, again, if the company is a listed entity, Then there is issue of materiality. You ask yourself, the tax planning thing that they are doing, is it going to give a material figure in the financial statement? If it is a material statement, no. So here, if material, no. But if it is immaterial, they can do it. Now, whenever I say these things, I now wonder who determines what is material. That is the point. And so in evidence, we will be measuring materiality. All right. But of course, as for these people, separate teams can do that. Then the last one is what we call dispute resolution. Dispute resolution or dispute resolution. Dispute resolution. Is the taxman or the auditor allowed to represent the client whenever there is a dispute resolution? Please, this is against profession, so it is a no-no. Why do you think it's a no-no? This thing is also called advocacy threats. You can't represent your client like that. All right. Then we have situations, and this one is the most popular one. It happens a lot, whereby the audit is doing internal control services, internal audit services, sorry. So the audit firm provides internal audit for the client, and they are the same person who is going to audit the client. Is it not a problem? So you must not. This one cannot happen. It cannot happen at all, at all. Because in the audit process, you audit the internal control. It is part of the audit process. It's part of the audit process. So here, there is sometimes leeway of saying here you can use a separate department just because these people are private. But guys, let's be frank with it, because the audit process involves test of controls. This thing is only allowed if you are not doing a reasonable assurance work. When the thing is a limited assurance, then fine. But for reasonable assurance, please don't do that. All right, don't do that. Because if you remember what we learned under reasonable assurance, we said that the auditor must use thorough procedures. That is test of controls and substantive testing. Test of controls is part. Now, if you are the one who did the controls, then what then are you going to audit? All right, so that is that. The same thing goes for providing finances. I mean, if you are the one who provided, sometimes audit firms are rich. They may provide finances for clients, which I don't see happening anyway. All right, so let's go to the next one. 3, advocacy. Now, advocacy simply means that you are finding yourself in a situation whereby you are promoting the client business. You are promoting the client business. And this thing happens usually when you advocate the good deeds of the client in public. Basically, it simply means you are advertising for the client. You are promoting the shares of the client. You are not supposed to comment on clients in public. In public. But I see audit firms hosting events and their events being sponsored by some of their clients. And so at the end of the day, they are saying thank you to their clients. They always talk about them. It happens. It happens. Now, when it comes to advocacy, we are encouraged that the auditor is supposed to appear independent in both indeed, independent in deed and in appearance. In terms of appearance, you are not supposed to let us believe that there is some form of third party having knowledge of all relevant informations. It's like you know something before you are even taking the job. Then, in terms of deed, what we are asking is that apply professional skepticism. That's all. Whatever you are doing, apply professional skepticism. It means scrutinize things well, ask questions, have a questioning mind, critical assessment or critical evaluation of audit evidence. We will look at professional skepticism in details in our next session. All right. Then 4, we have familiarity threats. As for familiarity, I think it's the most easiest one, because familiarity is familiarity. And so usually I tell students that one of the ways you can know issues of familiarity in the question is when you are reading the question, it will tell you that so and so has been the auditor for this company for so many years. Once you see that so many years, it is issue of familiarity. So it is, long service, family relations, all these things are familiarity. All right. And so we've learned about it. If you have a close family member, you have to remove that person and all those things. But I want to believe that you have heard of 666, right? 666 in audit is called audit rotation. In Ghana, you cannot audit a client for more than 6 years. You cannot do that. So when you audit him for 6 years, the next 6 years you cannot. You have to come back after 6 years. All right. But this thing, I think that it still doesn't solve the problem, because people will be rounding auditors. Once Deloitte say, let's say I've done this client for 6 years. Oh, Deloitte say, oh, let me give it to PwC. PwC, when you are done, return my client to me after 6 years. So they will be sharing clients among themselves. So the problem hasn't been solved yet. All right. Then let's talk about the last one, which is intimidation. Intimidation. Intimidation is situations whereby you find a client threatening the auditor, threat of dismissal. And using knowledge superpower when you have more experience. You see, when I started working in the corporate environment, my first boss was a Nigerian. He can sometimes intimidate the auditor. So you are auditor, you don't know this. Aren't you supposed to know this? And all those things. So the next time the young audit officer is coming to ask a question, to ask my boss a question, the person, normally they are ladies, they are afraid. Your experience, they are afraid. All right. Then, of course, the client can tell you that, oh, if you don't do this thing for me too, I won't get you this. I won't do this for you. I won't give you the next job. This non-assurance job, I won't give it to you. All these things are threats. All right. So, ladies and gentlemen, that is the SAFI. All right. If you have any question, you can ask. That is the SAFI. All right. Any question? Any question? This thing has been a lot. So, please, what I want you to do is that take, yes, Amiya.
Okay, sir. I just want to take us back small. I want to ask a question about uh, auditors recruiting for a company they are auditing. I've worked with some banks, that's rural banks, and what I realize is it's not recruitment per se, but what I realize is mostly when they are recruiting for top management members, they invite the auditors as panel. Always the auditors will come as a panel. Is that one too an issue?
Is the company you are talking about the rural bank a listed one?
No, the rural banks are not listed.
So that is the only reason why they can do that. If it is a listed one, it's not. They shouldn't do that. They cannot.
Okay. Okay, sir.
Hmm. What you are saying is true. It happens a lot. All right. So that is that. So please just take a 10 minutes recess and we will do the other three quickly. Those ones ends faster. All right. So the next one we want to look at is issues of confidentiality. All right. So when do we see issues of confidentiality as part of the ethical issues that you need to deal with? Now, confidentiality in the exams pans out this way. First of all, you know that confidentiality simply means that you not disclosing information you had on the client to a third party without proper authority. All right. So if you get as part of working on a client, if you get to be privy to some knowledge or certain things about the client, you should not use that thing for your personal gain. All right. So without anything that you do, you must seek permission. So in the practice, there are instances where, in fact, confidentiality in simple terms means protect client information. That's all. Because you will get information. And so therefore, if you want to use those information, we have instances whereby you need permission. So it means that if you want to use the information, you need to go back to the client and seek his permission to use those sensitive information. All right. But there are times too, you don't need the client's permission. So the permission wise, you need client consent. That's what we are saying before you use. These days, people take pictures of people just like that. They take pictures of people just like that. And they are posting. That thing is not a good thing. All right. But there are instances where you don't need the permission of the person to take the picture. There are instances where you are required to. And these instances are instances where you have legal obligation, whereby the thing is of public interest. So when somebody is beating somebody, killing somebody, and people start videoing, that one you don't say the person did not ask you permission. No, because the thing you are doing is of public interest. Yeah, and the person has a legal obligation to report it, so they will video it. All right. So that is that. When the things boils on legality and regulatory issues and public interest, you don't have any need for permission. You must do that. But in the exams, usually this is how confidentiality pans out. This is AMA Limited or AMA as a person. AMA used to work with an audit firm A, and audit firm A was the auditor of a company. So a company, so let me say this, company B. This is not an audit firm. This is just a company. All right. So that is that. So Amma, who used to work in this audit firm, got to know certain information about company B. Then comes in company C, who says that they want to hire Amma. And why are they hiring Amma? They are hiring Amma because Amma has some knowledge in company B they will need. And that is where confidentiality comes in. Confidentiality dilemma comes in. So because he was in this audit firm, audited this one, they know he has some knowledge there, and so they want to employ her. And when it happens like that, Amma is having ethical issue of confidentiality. The ethical dilemma is that should she provide the information she has in company B to company C? That is where the issue is. All right. So that is that. So when you see such scenario in a question, that is about confidentiality. All right. Then 3 is conflict of interest. I always tell students not to confuse conflict of interest with self-review. No, don't do that. Because it is likely that it has some connections. Of course, if you are the one who prepared the financial statement and you are the one to audit, there is conflict of interest. But that is not the situation we call conflict of interest. That is self-review. So put it under self-review. Conflict of interest is widely used in situations whereby the auditor is found to be auditing two competitors. So let's use Samsung and Apple. Audit, you are both their auditors. That is where the issue is. You are auditing two competing clients. The danger is that any information from Samsung can make Apple benefit. So if by mistake an information slipped to the other side, because they are competing, it will create a problem. So this is the situation you apply the issues of conflict of interest. Now, what are the safeguards you are supposed to adapt, all right, in this particular scenario? Now, if you are the auditor and you start, you must be able to assess the potential conflict of interest. So your job is assess potential conflict. You identify and assess potential conflict. Now, if these conflicts are huge, other things you can do is to use separate engagement teams. Use separate engagement teams. So don't let a person who will be here be the same person that will be here. So that is that. If possible, even use separate physical offices. So use separate offices so that they don't come into contact with themselves. So Deloitte Ghana, Deloitte Nigeria, that is what you are doing. All right, so that is that. Then whatever work that are being done, assign independent partners to oversee each engagement. All right. Then again, you should prevent information leakage. That is the reason why you are doing the separation. All right, take note of that. It's very important. Moreover, you can resign from one of them, but that thing should be the last answer you should write. All right, you must resign from one of them. If you want, you can resign from all, but that will affect you. But the other way around, you can also disclose the conflicts. So that everybody knows that this is the situation, but you are still on top of your job. All right. So these are the safeguards. They always say use Chinese words, that's the separate offices, so that you don't come into contact with each other. All right. All right. So the last one for the night is what we call the integrity of the client. Now, when we talk about the integrity of the client, you know what we are talking about. How trustworthy is the client? All right. And this one, we look at it in two main folds. We use ISA 240, which talks about fraud and error. And ISA 250, which talks about laws and regulations. All right. Now, we know what fraud is. Fraud is intentionally duping somebody. All right. You are intentionally duping the person. Okay. So there's intention there. But error there is unintentional. That's the only difference. Now, what you need to know about these two things, which are usually examinable, is whose responsibility to prevent fraud and the error. So responsibility for prevention of the fraud and error. And also responsibility for compliance to laws and regulation. Whose responsibility is that? So that's the first thing we need to discuss. First of all, when it comes to detection and prevention of fraud, it is not the job of the auditor. Bear in mind, it is the job of those who are working in that company. So this one is purely the responsibility of those charged with governance. And management. And the same thing for this side too. Because let's be frank, the auditor comes to your office at the end of the year to audit your financial statement. How on earth do you suggest that he's the one to prevent and do the detection of the fraud and error in your office? How? So these things are responsibilities of the people who are in the business. Then the question is, if that is the case, then what is the responsibility of the auditor then? What is the job of the auditor when it comes to fraud and error? Now, The auditor is always supposed to find reasonable assurance that the financial statement that has been prepared in all material respects are free from material misstatements. So that is what is required from the auditor. And so therefore, we know that when fraud happens, for example, if cash is stolen, it will affect the cash balance. If asset is misappropriated, it will affect the value of the asset. So some way, one way or the other, this thing will affect the auditor. And so first, the auditor is supposed to assess the risk of material misstatement that will be due to fraud. So that is his first work to do. You assess any risk of material misstatement. And this thing, even before you come to the client office, that is what you are supposed to do. So you identify, you take their trial balance. We call it the trial balance. Yeah, that's it. The client is supposed to send you their trial balance. So your job is to identify and assess any risk of material misstatement that will be due to fraud or error. That is what you are supposed to do. Then if you identify and you assess it, then you must obtain sufficient appropriate evidence to support that. You must get sufficient appropriate evidence. Now, getting the evidence is where the issues come. One of the ways you can get the evidence is to obtain written representation. Written representation. Now, in every audit work, we will learn about written representation. All right. In every audit work, the auditor is supposed to get a letter from the company that says that, oh, we are the ones who are responsible for preparing the financial statement and also to maintain integrity so that there is no fraud in our financial statement. We have done that, and we can tell you that the financial statement is prepared free from fraud, free from errors, because we have the qualified people. So all these things are what the audit firm, the client will tell the audit firm. It's called written representation. All right. This thing must come. Yeah, it must come from the client. All right. That is that. Now, if you are the auditor and you get this thing, then that is where your professional skepticism must come in. You are supposed to apply professional skepticism. So once they've given you that written representation, you are supposed to scrutinize that written representation. You are supposed to scrutinize it. So you need to get that. It is the job of the auditor, after getting these things, to discuss among the engagement team. So obtain these things, discuss among the engagement team, hold discussions among the engagement team about any suspected fraud or error. All right, you have to have that discussion, an active discussion, without assuming management are honest. Don't ever think they are honest. No, 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 no. So have the discussion, and this is a requirement by ISA 315. All right, understanding the entity and its environment. So you are supposed to have that discussion. You have done your risk assessment and also find out that probably there may be risk here, there may be risk that. So these things are what you are supposed to do. Now, if you find any form of fraud using your assessment skills, the evidence that you have, then find out how does that one, so we call it the risk assessment. Now, how this one that you have done, how does that risk assessment relate to the financial statement? Now, the truth is that if somebody has stolen money, how does it affect the financial statement? If somebody has committed a mistake, how does it affect the financial statement? So when you identify and you assess, you must assess it, that fraud, you must assess it in relation to how it affects the financial statement. So is it going to affect the cash balance, affect your asset? Is it that material so that it will affect the opinion that you give? So these are the things that you do. Now, finally, last but not the least, you are supposed to communicate it, report it. Now, first of all, you report these things to management internally. But if management is part of the fraud that is happening, then it means you need to go beyond the management and go to those charged with governance, especially the audit committee on the board. But what if the entire board is part of the problem? Then it means you are supposed to go to the regulatory authorities. Because invariably, you are actually supposed to report these things to the shareholders. But the shareholders are represented by independent non-executive directors. But if all these people are involved, then you must go straight to regulatory authorities. That is what will happen. All right. So take note of that. The reporting is very, very important. It's very, very important. All right. So that is that. Now, you must document everything that has happened. Documentation. Everything that happens in audit, please, you must document it. So document everything. Now, the thing is that sometimes the auditor is unable to continue his work because of the fraud that is inside the business. It happens that the fraud is too much that the auditor cannot, feels like, no, this place is not a good place for me to be, and so therefore he wants to leave the job. Now, when you are leaving the job, in cases like that, where you want to leave the job, remember you have a professional and a legal responsibility. So you are supposed to report the matter either way. Whether you resign or you don't resign, you are supposed to report it to the shareholders or the regulatory authority. It must be done. It must be done. The communication to there is the shareholder part. The shareholder communication that you will be doing is always in the audit report. So when there is fraud and error, sometimes it is communicated in the audit report. All right. And so when the thing is so bad that you cannot continue the work, then it means that you still have to report the thing to them and the regulatory authority. All right. So that is that. In fact, they say that you resigning doesn't mean that you have completed the right thing to be done. You must report them. All right. So that is that. Now, when it comes to law and order or laws and regulation, the same thing suffice. You see, as an auditor, first, you are supposed to obtain sufficient appropriate evidence that the firm is compliant. So you need to obtain sufficient appropriate evidence that they are compliant to the laws and regulations. Now, how do you go about that? An audit firm is supposed to first know about the laws and regulations themselves. So by ISA 315, you need to understand the entity and its environment. Understand the entity. which means that you need to know about the laws and regulations surrounding the entity and its environment. You need to know what are the laws and regulations surrounding the entity that you are auditing, so that it will help you obtain this sufficient appropriate evidence. It's very important. So when you understand them, you need, like this, the same thing applies here. You need written representation, a statement from the client's governance body that says that as for them, they obey the laws and regulations. You need a statement from them. All right. So then once you have it, then you do your risk assessment. Risk assessment. This thing is very important. When we say risk assessment, what is the relationship between the risk and the financial statement? Remember, if an entity is non-compliant, it means IAS 1 is at risk. Now IFRS 18. Because you must say that the client is on a going concern. Now, if you are on the going concern, do you know that if you don't obey the laws and regulations in the environment that you are in, it can actually cause your business to come to a halt? And so this thing is very important. So it affects the financial statement in terms of IFRS 18. It affects it. All right. And so therefore, you do the risk assessment. You apply professional skepticism in obtaining your evidence. It's very, very important. So as for an auditor, that is what you are supposed to do. That is what you are supposed to do. So do that. Do go through this. Know about the laws and regulations. Check if they are compliant. It's very, very important. Very, very important. So, like I said, obtain an understanding of the place that you are going to audit. All right. Then, if the person is non-compliant, like you suspect some non-compliance in there, then you obtain evidence about that. Any suspicion that you have, obtain evidence about that. But then, once you obtain the evidence, you must therefore go ahead to communicate it. So the same communication process that happens here, we call it reporting. You must report it. And the reporting is the same thing as this. Lastly, you must also document it. Very important. Documentation. Everything must be properly documented. If you suspect any of these things, document it. All right. So, ladies and gentlemen, that is that. Okay. So this is about the auditor's considerations for compliance of to laws and regulations. That is that. All right. Now, before you go, we've learned so many things here. We've learned so many things here. If you are asked to assess the ethical issues, like we've studied, ethical issues, please, your answer writing matters. The first thing you are supposed to do, so let's take this thing as your answer booklet. These are the lines. These are the lines. Now, normally when you have these questions, they are 10 marks. 10 marks. Sometimes the examiner is specific. He will say 4 ethical issues, 3 ethical issues, 5 ethical issues, whichever one it will be. Now, this is how you are supposed to answer your question. For example, I'm given a question and I've been asked to identify the ethical issue. I have seen that there is a self-interest threat in the question. So what do? You say 1, self-interest threat. Self-interest threat. This is what you do. You write it like this. Then in the next line, you will come and say, there is potential issue of self-interest because now you can, this word because, you can change it. You can say due to the fact that, owing to the fact that, by reason that, you can change that part. Now, we learn so many things under self-interest rate. Which one was it do you spot in the question? Because there is a financial interest. You can write that. Because of overdue fees. Because of this. Because of that. But it must come from the question. Now, watch this. Once I say this, I have said financial interest. Which part of the essay, the question you've been given, talks about financial interest? Kojo Menu owns 50%. That part that is in the question, go and copy it and come and paste in your answer. Please, it is the question in front of you. So nobody is asking you to explain self-interest rate is a situation, blah, blah, blah. You are not supposed to do that. Your own is to state that there's self-interest rate. Once you see this thing is 1 mark. There is self-interest rate because of the financial interest. You have said there is financial interest, but which part of the question says there is a financial interest? Go and copy that part of the question and come and paste financial interest. So self-interest, because instead of even saying financial interest, you can say that because so and so own 50%. There is an issue of financial interest of so and so owning 50%, blah, blah, blah. So that is that. If it is self-review, why is it a self-review? We know there is a potential issue of self-review threat because of, go and copy that part and come and paste. So let me provide this space as that part you have copied and pasted. Go and copy that part and paste. Do you know why? Now, if you're able to do that part too, you get an extra 1 mark. Why? Because when we are marking your scripts, what happens is this. Once we know that you have seen the self-interest rate, that is good. And you have shown us where there was a self-interest rate, that is also good. That is it. So copy that part and come and paste. So take note of that. You are not done. You add this statement. This could impair the objectivity. You can also use the word independent of the auditor. You have to add that statement because this statement plus your safeguard. What safeguard is available? So if it is self-interest rate, like we said, is it a no-no? Dispose the interest, allow an independent person or take the person out of the team and allow an independent person to review every work they have done. As you mentioned that part to this effect, you have your 2 marks. And so your 4 marks is done. That is it. So if the examiner tells you the number of points to write, find out the 4 and write. If there is confidentiality, write. If there is conflict of interest in the question, you know what to do. Everything, you know what to do. So that is what you write to get your 4 marks. Sometimes the examiner will tell you that the A is the threat, the B is the safeguard. So do all the A and come and do all the B. So ladies and gentlemen, this is it. Now, to really know that you have understood this answering methodology and you will be able to do it, if you check your platform, I have given you some work to do. I've given you some work to do. It is my November 2025 intervention question, March 2025, sorry. So what you are going to do is that you are not starting it now. After I meet you on your next class, which is where I talk about the professional consideration, you have 2 weeks. There are 3 questions. You have 2 weeks to solve all those 3 questions and send your answer to me PDF scanned. Don't send me pictures, scan it. Get a cam scanner on your phone and send it to me. I will read it and I'll comment on it. Don't type, because in the exams you don't type, you write. All right. So take note of that. That is what you are going to do. So start preparing yourself. So please, you saw what I did. I mentioned the threat. I left. I didn't continue here. I came down and wrote that there is an issue of self-interest because go and copy the thing in the question. Come and paste. Add that thing would impair independence. It will impair the auditor's independence. All right. You can change the word impair. I don't say go and write the same English. This could affect the objectivity. Write different English. All right. Then add your safeguard. That is how you answer the question. So that is that. So God willing, Saturday we will meet and I will do the professional. All right, the professional. Then you can start answering the questions. You have 2 weeks. So I will collect the answer by 15th of May. 15th of May. All right. So that is it.